going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
Bitcoin. I mean, so it's a two-part question. Is that in a bubble? Maybe three-part question. Is it dangerous? And what do you think the likelihood of the government outlawing it is? And is that even feasible?
Bitcoin has proven itself over the last 10 years. It proved it hasn't been hacked. It's by and large, therefore, worked on an operational basis. It has built a significant following. It is an alternative, in a sense, storehold of wealth. It's like a digital cash. And those are the pluses. Bubbles are financial assets that have imputed value. It's an asset that doesn't have intrinsic value. It has imputed value. It's whatever we think it is. And if you look at some of the bubbles in the past, a great book is Extraordinary Popular Delusions and the Madness of the Crowds by McKay, 1845 or something. But he talks about the South Sea bubble, and he talks about the Mississippi bubble and so on. It is when people love it. It's the dot-com bubble and so on. And that could be. So when you look at Bitcoin, it's a possibility. It's an alternative because there aren't many such assets. There are not so many assets that might have intrinsic value that can't be messed around. As far as the government allowing it, the history was, banks always used to exist. And then with the Bank of England, they decided that it was in their interest to have a monopoly on banking at a country. And so what we did is every country treasures its monopoly on controlling the supply and demand. They don't want other monies to be operating or competing because things can get out of control. So I think that it would be very likely that you will have it under a certain set of circumstances outlawed the way gold was outlawed. And you're watching that question arise in India today. India today is making the move to outlaw possession of it. Okay, so we have to see what that means. Now, can they do it? Now we get into the particulars. My understanding from people who are sort of in government surveillance and go on is, yes, they can understand, they can track it, they can know who's dealing with it. I don't know, I'm not an expert on that. But there's a whole way, is it private wallets? Is it not private wallets? How do you do this, and the other thing? I would suspect it would be very hard to hold up against that kind of action. So that's what it looks like to me.
Trade, like just the need to change dollars into yen or whatever to buy or sell commodities in Japan is itself like a 7% tax on the transaction. Right. And imagine if you could take all of that out, because The yen
that
never moved.
Productive capital.
I've got a stable coin, which is a representation of money that is held at the Bank of Japan, but the money's not leaving the Bank of Japan, so there's no foreign exchange.
Yeah.
That's the opposite.
Welcome to the Crypto Teacher. And guys, please like and subscribe if you do like what you're listening to. Please inform your friends and family and spread it all over social media. It is imperative that we get back to learning finances and understand how the world really works, because once we understand how the world really works, we understand that everything is planned out. Now, I want to thank those who purchased the books Cryptoteacher and the New World Order book. Remember, those books are mandatory because they show you how the world really works. Also, those who donate to the Cash App, Patreon, much love. And then also, those who are shopping at both stores, much love to you. Keep it coming. And of course, guys, we get into Bitcoin and cryptos first. Right now, the market is definitely flat. And we see this weekend we didn't get a lot of volume like I advised you. Now, if you're a trader, you made your little money this weekend. But do not forget that we have CME opening up tonight. So it's definitely going to swing the market. Now, basically, do not forget to pay attention to the volume, your indicators, Tether, USDC. Just like I said, the volume was actually flat. It wasn't enough volume to take a big dump or to make a big increase. Remember, you have to have that volume to make a big move either up or down. Now, don't forget we have the Fed facilities closing on the 31st, but we know the Fed increased the repo by $50 billion, so that's $1.5 trillion. So like I stated, this week coming up is going to be very volatile. And don't forget we had like 1.5 billion Ethereum futures expire, and then also like 6 billion of Bitcoin expire. Like I stated with CME, they're closed on the weekend. They open up Sunday night. So if we don't see any manipulation, we're definitely going to take a good dump. But we know they definitely need Bitcoin on the 5th. So normally we get on the runway on the 1st and we take off on the 5th. And don't forget Grayscale closes Bitcoin Trust. So make sure we keep an eye on them. Now, getting over into the actual videos, I received a lot of messages as far as with the Ray Dalio comment. So guys, do not forget he's a piece of the New World Order. But also do not forget the central banks took over Bitcoin with Bitcoin Lightning. Remember, Bitcoin is going to sit there, the core of Bitcoin, and the Bitcoin Lightning is that second layer that's going to do the micropayments, the IOUs for the core of Bitcoin. So it is definitely the same system that we're in now. Now, is Bitcoin going to be attached to the global cryptocurrency? We have no idea yet. It has to be pegged to something first. Other than that, right now, it's just speculation. But we know that the digital yuan that China has is going to be a global reserve currency. We know that China controls majority of the hash rate when it comes to Bitcoin. So we know that China has a plan for Bitcoin. We know that a percentage of the digital yuan is going to be attached to gold. We already know this for a fact. But some of this you have to let play out. But definitely right now, Bitcoin is just solely speculation. But we know that Bitcoin Lightning is going to give it that real use case. And with Bitcoin, all these transactions are public. And that's exactly what the central banks want. The central banks want all their transactions private, but the masses public. But when you look at the fourth industrial revolution, and you think about the robots, drones, AI that's going to be using cryptocurrency, Bitcoin fits into that. But you definitely have to use your imagination. And we have Brian Brooks explain the current system that we have now. Dollars are nothing but IOUs. But now what they're going to do is create the stable coins to be representation of the real currency. So therefore, like he stated, you won't have to worry about foreign exchange because the actual real currency is not moving. Only the digital form is moving. So the current IOU system is not going anywhere. It's just being elevated to IOU 2.0. And remember, the crypto teacher told you. Because when it comes to the New World Order, it's all planned out. And that's all I have for you guys. Don't forget about the books, Crypto Teacher and the New World Order book. Also, if you're new to cryptos, Coinbase, Bitrue, Binance, do not forget book links, crypto links are in the description. Also, the stock channel. Do not forget about the Crypto Teacher stock channel. You have your Cobalt, your chip stocks, your banking, your gaming. While everybody's sitting at home, you got that home stocks. The C word, the biotech stocks. And while everybody's at home getting free money and waiting on that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and y'all have a wonderful day.
One of my very first questions was, can this scale to be money for the entire world and for everyone to use? And so I went on bitcoin.org and read the details about how Bitcoin could scale to the world. And it went over the exact mathematics involved as to how much bandwidth it would take, how much hard drive space it would take, how much processing power it would take. And it was clear. Bitcoin could scale to be money for the entire world. And then later, a bunch of people came to Bitcoin, much later, who started spreading all these lies and using censorship and propaganda to spread them, saying that Bitcoin can't scale to be money for the entire world. But anybody out there is welcome to go to the Internet Archive and look up bitcoin.org and read the articles about the scalability of Bitcoin from back in 2011, 2012, even in 2013. It was very clear. And so all through that time, there was this one single version of Bitcoin. And people with Samson's view of Bitcoin that it shouldn't be used for coffee payments and it isn't for people that earn less than $2 a day, split.
Hey, you. You may have seen something about Bitcoin a few years back. It sounded revolutionary. This was going to replace the banks. It was permissionless, decentralized, peer-to-peer electronic cash. No one can take it from you. You can send any amount for less than a penny, fast. But a large amount of Bitcoin to a well-connected party that consistently has more money than you, so you can always route through. This is why hubs will naturally occur. A Lightning hub is a node with enough channels open and enough liquidity available that by connecting them, you limit the amount of channels you need to personally open, never have to worry about their balance, and reduce the amount of hops and fees required to make transactions. Unlike miners, who don't actually transfer value, these hubs will likely be classified as third-party settlement organizations, being subject to heavy financial regulation laws such as KYC and AML. Also, unlike on-chain transactions, there is a chance of theft in this system. If another party attempts to broadcast a channel in an old state, they can try to steal your Bitcoin if you can't catch them in time. For this, you will either need to run a full Bitcoin node that will always be online to monitor the transactions yourself, or hire a third-party service to do this on your behalf. So, the Lightning hubs will require to be set up for financial regulation and reporting laws, require massive amounts of liquidity to keep multiple well-funded open channels, offer fraud departments to watch the blockchain constantly and prevent theft, all while taking small fees for every transaction you route through them. Does this system sound familiar? Just replace the term open channel with checking account. These Lightning Network hubs will be ran by the same financial institutions the Bitcoin was made to challenge. The banks aren't fighting Bitcoin because Bitcoin will be the new banking system. Bitcoin needed no middleman. There was no fraud to detect, no permission to give, no transaction to reverse, no fees to collect. So it had to be broken to need them. And the worst part is, you won't have a choice. Either give up your freedom and use the Lightning Network, or be subject to double or even triple-digit ever-increasing fees for every move you make on the blockchain. The truth is, the 1 megabyte blocks restricting Bitcoin are purposely kept there by the developers. The absurdly high fees and long waits create a demand for a solution, and the solution they give us is the banking industry. The block size restriction was placed as a temporary safeguard by Bitcoin's creator, Satoshi Nakamoto. As soon as the blocks were close to being full, it was to be raised again. Satoshi mysteriously left the project in 2010, but before he did, he left instructions on how to raise the block size and left Gavin Anderson in charge of the project. When Satoshi left, institutional money started to make its way in and take control, and a company, Blockstream, emerged. Over time, it happened that a large portion of the development team was part of or hired by this company. And when it came time for another block size increase, there was a portion of the developers that thought this was a bad idea. This just so happened to be the same group of developers that worked for Blockstream. The story